Okie dokie. So the first market that we'll cover is the S&P 500. So looking at the big picture, the weekly time frame, you see that the S&P 500 is still pretty much bullish, right? Look from left to right. What is price, or say what has price done, right? It has traded higher over the last few years. And if you ask me right now, it has entered into a period of consolidation, right, between these highs and lows over here. So long term, I'm still bullish on the S&P, right? My bullish bias would only change if it can break this area of support, right? If it can't break this area of support, my bullish bias would remain. So this is the weekly time frame, and if you look at a daily, notice that price is still above the 200-day moving average. So this is a very simple filter, right? This black line over here is the 200-day moving average. This red line is the 20-period moving average, and this blue line is the 50-period moving average. Let me write it down, right? So very simple. For trading, right, you can just use the 200-period moving average to act as a filter of whether you should be long or short. If price is above it, stay long. If price is below it, stay short. So this is a very simple filter to keep you on the right track of the market more often than not. Okay, so as of right now, the S&P 500 is still above the black line, which is the 200-day moving average. So I'm still bullish on this. But one thing to take note is that recently it has formed this head and shoulders pattern over here, which you've seen. This is the neckline. And if it breaks, all right, we can expect, maybe further downside in the coming days and weeks ahead. So this is my take on the S&P 500. Short term, right, it is not looking too bullish, but in the long term, right, the weekly time frame, right, looking at the next few weeks, next few months, all right, this chart still looks pretty much bullish on the weekly time frame for the S&P 500. Okay, so up next, let's have a look at the DAX market. So DAX is the stock market at the European side. So the DAX market is the weekly time frame. It does not look as near bullish as the S&P, right? In fact, you see a series of lower highs and lower lows already. So the weekly time frame does not look as bullish. And if you look at the daily, it is not good as well. If you zoom out a little, you notice that price is below the 200-day moving average. So longer term, I'm actually bearish on DAX, right? I wouldn't look to get long. And if you see right now, the DAX is below the 200-day moving average. And you saw the weekly time frame earlier that we have a series of lower highs and lower lows. So not looking too good for the DAX, right? If judging on a weekly time frame, we draw this, a trend line channel, something like this, or just a downward trend line. You see this, it has a possibility of it, going back to retest these lows over here, right? So DAX, I'm bearish on DAX. So up next, so look somewhere, closer to Asia. How about the Nikkei 225, right? You look at the weekly time frame. Again, the Nikkei 225 does not look as bullish as the S&P. You have a series of, lower highs, lower lows, lower lows. Not looking too good. For those of you who use channels, all right, if you just can, I believe, can connect something like this and maybe something like this. Doesn't really look too pretty because I didn't really go and curve it exactly. But yeah, you notice that it's pretty much in this downward channel, right? So the Nikkei, at this point in time, I'm still longer term bearish. You look at the daily time frame. Let me get rid of this line. On the daily time frame, you just use moving average, right? Notice that it is also below the 200-day moving average, which is this black line over here. So nothing bullish on the Nikkei as well in the long-term picture. And how about STI, right? STI is the that's the Straits Times Index, Singapore local stock market. I can't believe I messed that up when I'm actually from Singapore. So the weekly time frame again doesn't even look bullish at all. If you look at this, what I'm seeing is that it's a potential inverse head and shoulders pattern with this downward neckline. But chances are, if it does retest this low over here, this pattern would be invalidated. If you look at the daily time frame, it's again below the 200-day moving average. Doesn't look bullish at this point in time. I would say, there is this period of, I would say, how to put it, choppiness in this market. So if you ask me, there's a good possibility of it retesting back this swing low and this one over here. So the STI is not looking good as well. So in terms of the global markets, right, we just do a quick recap, is that you notice that the S&P is still the strongest among all of them. Look at the daily time frame, it is the only market that is above the 200-day moving average. You look at the DAX, which is this one over here, is below the 200-day moving average. You look at the Nikkei 225, is below the 200-day moving average. You look at the STI, is below the 200-day moving average. So worldwide stock markets, the S&P seems to be the leader as of right now, and the Asia Pac, the Europe side, right, not looking too good. Okay, so that's my take. So to move on a little bit, let's talk about the bond markets, right? So the bond markets is usually has a inverse correlation with the stock market. There are different theories into why that is, but as a trader, I'm not really too concerned why it is correlated, right? Because as a trader, I just simply trade price and I just manage my position accordingly. For those of you who are interested, you can always read up, Google it, and understand it. But one thing to note is that correlations does not always hold. It can break at times, all right? So don't rely solely for your trading decisions, right? It's good to know, but it's definitely not a prime factor to rely totally to base your trading decisions, all right? So first up, we have a look at the 10-year treasury bond, shall we? So you can see that this is the 10-year treasury bond, a daily time frame. It's above the 200-day moving average. So long term, you can see pretty much still bullish on the 10-year treasury bond. If you look at the bond, right? This is for the bond is the 10-year bond on the Europe side, right? You see it's also above the 200-day moving average, and it's looking pretty strong, right? Definitely stronger than the 10-year treasury, the US one. And how about the UK one, right? It's also above the 200-day moving average. So you can see that pretty much the bond markets are performing. I would say they are in an uptrend compared to most of their stock market counterparts. So I guess just to highlight to you a potential setup on this market, which is the 30-year treasury. If you look back, this is the 30-year treasury. This black line over here is the 200-day moving average. So it has tested once, twice, right? This whole chunk, let's consider as the third time, the fourth time, the fifth time. So what I'm looking is that for it to possibly retest back this area of support, then this black line will trade higher, and there is this confluence factor of area of support and the 200-day moving average. I would say this would be a potential long setup, right, on this 30-year treasury bond. So this is a market that I'm also paying attention to. So yeah, I'm still bullish on the bonds because, as I mentioned, right, you notice that the other bond markets, they're all pretty much in an uptrend, whereas the stock markets, right, most of them are in a downtrend, except the S&P 500. So that's it, right? That's all I have for you in this week's market analysis. Basically, just a broad overview into what the global markets are doing. So in short, right, just a quick recap. A very quick recap is that in terms of the stock market, the S&P is the strongest because it is the only one above the 200-day moving average, right? Above the rest, like the DAX, the Nikkei, the STI, all below the 200-day moving average. If you look at a bond, we look at the 10-year treasury, the US bond, we look at the UK bond, we look at the European bond. All of them are above the 200-day moving average. So the bond are definitely, still in an uptrend according to my definition. And I share with you a very possible trading setup, which is on this 30-year treasury bond, on the US one. You see that the 200-day moving average has been acting as dynamic support a number of times, right? So this is a potential market to look out for. If price were to retrace lower, this and the 200-day moving average were to trade higher, this would be a potential long setup, right? Depending on whether you want to wait for a price action confirmation and stuff like that. Okay, so with that said, I've come to the end of this week's market analysis. If you find this kind of videos useful for you, right, you just can hit the subscribe button below and you'll always be constantly updated, right, whenever I publish a new video. So with that said, right, if you have any questions, any feedback, feel free to let me know in the comment section below. With that, I wish you good luck and good trading. Talk to you soon.